So Morgan Stanley have published a new note lowering their price target on Tesla stock to still a very bullish $320 per share.
Let's check in on some of the top calls of the day. We'll start with Tesla shares. They're dropping for a third day in a row. Today's news, Julie, is that a very well-known Tesla bull, that would be Adam Jonas from Morgan Stanley. Adam takes out the red pen and starts cutting. Yeah, does maintain his buy rating, we want to stress that, but does cut his price target, takes that down to 320, and tells his clients the company could report a loss this year based on GAAP accounting. EV demand slowing, he tells them. Companies are dumping their EVs. Hybrids competing for the marginal EV buyer, he says. And this coming, of course, as Tesla stock has really suffered a rough slide so far this year. We're down about 30% now.
Yeah, I mean, you could argue even that Jonas is a little bit late to the party. I mean, a lot of what he talks about in his note is stuff that other people who are not as sanguine on Tesla have been talking about in this market already. One of the interesting points here, he says that Tesla's product is relatively aged.
Is this real life? Not again. Aye. He can't obviously be talking about the new Model 3 because the refreshed version of that is brand fucking new. First coming out of Shanghai, now the US, so can't be the Model 3. Surely it can't be the X or S because there was the Plaid refresh not long ago. And he can't possibly be referring to Tesla's Model Y, which is currently the world's best-selling vehicle, and no doubt there will be a refreshed Model Y with comparable features to the refreshed Model 3 eventually. But I'm sure Tesla's not in a rush to get that out the doors, since Model Y is literally the world's best-selling vehicle, one more time, the world's best-selling vehicle of any kind, the Model Y. And then there's the Cybertruck, which is taking the world by storm. Hottest ride for A-list celebrities. Apparently Elon having opinions, doesn't matter. And surely Jonas also knows that Tesla's announced, I mean, they said they're finalising their production systems for the next generation vehicle. So I look forward to reading that note, which we'll do after this short clip. Maybe Yahoo have got it wrong, but if not, it's going to be fun to read. And just a moment here, it wasn't that long ago that a stunning majority of analysts on Wall Street were recommending investors buy Tesla, which was pretty rare. Doesn't happen that often, not historically. And now, hold. With Tesla stock, as I record this, high 100s per share. With stunning demonstrations of FSD V12, human-like driving behavior. Tesla currently addressing their AI training compute bottleneck, an unassailable data lead, an insanely profitable energy division. What is going on? Oh, I know. Groupthink, herd mentality. Oh, is everyone scared? Is everyone just hold? Okay, we'll hold, do you? Just hold. If you saw yesterday's video toward the end there, historically, most of the analysts covering Tesla stock have an embarrassing track record, recommending people sell it mid-2019 in the teens, well and truly more than a 10x since then. Most of them didn't get it then. But of course, this time's different. The hold, of course, really suggesting it's fairly valued right now. You know, you don't want to be buying here, just hold. I really do wonder what the 12 analysts with the sell rating on Tesla are thinking. But anyway, this is just another moment in time.
It is, that the other major automakers are sort of earlier in their cycles, which has been a disadvantage for them. At this point, he says, maybe Tesla's product is not as exciting. And many analysts on the street are waiting, of course, for them to come out with their next mass market automobile. So that's something to consider.
So I'm not exactly sure if analysts are waiting for the next gen Tesla to come out, but here's a question I just would like to pose to you guys and girls. If it were true that a company had told investors and the public, but mostly investors, that they develop a new manufacturing system for a next generation vehicle that would dramatically reduce the cost to produce a compelling electric vehicle, and you knew that was coming, and they'd also said that they're just finalising the production system, so you know it's coming. They've also talked about first ramping production in Austin, so you know it's coming, and then transferring what they've learned in Austin to Mexico, so you know it's coming. Would you be waiting until after this thing is announced and production's commenced and so on, or would you be buying before the announcement and the inevitable, well, maybe not inevitable, but the likely impact on sentiment around Tesla? I'm just asking the question, would you wait? Or since you already know that this is just around the corner, something to think about.
Consider as well, he's also talking about the penetration of Tesla in the mature markets like California, for example, already. And he also, of course, talks about competition in China.
Yeah. I mean, you read this note, it was so downbeat. You kind of felt like, why is he still overweight? He explains to his clients, listen, because I think it's an auto stock, but I also think this is an energy play, an AI play, a robotics play. So he's sticking with it, despite what he acknowledges is just overwhelmingly, he says, bearish sentiment at this point.
Can confirm sentiment currently. Let me just stick my finger in the air. Yep, definitely bearish. Now, sentiment's got nothing to do with the company, what's around the corner, where they're at, their technological leadership, dominant position. and sentiment shifts as quickly as the winds. But things are definitely bearish in terms of many analysts, many covering Tesla stock, many investors, many clowns in investor clothing who possibly manage money for other people as well. It's all par for the course. A chart is sometimes worth 1,000 words, so I'm not going to need to add too much, but on screen now, Tesla stock $176.54 per share. Market cap $553 billion. With a 52-week high of basically 300 and a 52-week low of basically 150. Extremely volatile. Over the last 1 year, Tesla has gone absolutely nowhere, effectively down 6%, but during that time, huge volatility. The last 5 years, equally volatile, but in that time, up 832%. All time, up nearly 14,000%. So the message is pretty clear. Historically speaking, Tesla can go through very long periods where the stock bounces up and down, seemingly going absolutely nowhere. My favorite example of which on screen now, 7th of March 2014 to 31st of May 2019. Okay, one more time. March 2014 to May 2019, more than half a decade. Tesla stock over that period of time, from peak close to its lowest point, down 24%. Imagine buying Tesla stock and 5 years later, you're down 24%. Of course, that would never happen again. Nothing quite like that. It's not possible, right? Well, as we can see, Tesla stock is extremely volatile, very sentiment driven. There's a lot of herd mentality among Wall Street analysts. Everyone's selling, then I'm selling. Everyone's holding, I'm holding. Everyone's buying, then I'm buying. It's kind of laughable. I've noticed that people who are emotionally very volatile often have this emotional volatility amplified by Tesla's volatility if they so happen to own some Tesla stock. Call me crazy, but personally, I think that if people are being emotionally affected quite severely by the movements of a stock they happen to own, they may not be cut out for owning that stock, or any for that matter. So Morgan Stanley's full note: a challenging year for EVs, cutting gap earnings per share to less than $1 and price target to 320. So what's changed? Price target previously $345 per share, still extremely bullish. So let's see what Morgan Stanley have to say. EV demand, are you ready for it? Continues to decelerate despite continued price cuts. And it's definitely true. That's why in 2023, Model Y sold more vehicles than in 2022 and became the world's best-selling vehicle. And why it will sell more units this year than last year. And why electric vehicles as a percentage of all new vehicles sold continues to increase by multiple percentage points year over year. Totally makes sense. Please tell us more about decelerating EV demand. Morgan Stanley. I think Tony Seba may take issue with this claim. Fleets are dumping EVs, and strong hybrid momentum is competing for the marginal EV buyer. Could Tesla lose money sometime this year? Wouldn't that be something? Between you and I, that'd be amazing, actually. Tesla reports a loss. Panicky short-term investors might dump the stock. I might be buying at an even greater discount. Bring it on. If there was ever a time for Tesla to potentially post a gap EBIT loss in the auto business, it may be this year. Now, interesting. I note that they have sort of caveated this with in the auto business, not the energy business, not overall, but in the auto business. Tesla's product is relatively aged. Oh no, they are gonna. I thought maybe Yahoo got it wrong, but is this real life? While Tesla may be the most technologically advanced car company in the world, its product lineup may be the oldest of any major OEM, with nearly all of its lineup launched prior to COVID. Now, for people with such large brains, Morgan Stanley can sometimes live up to the name Moron Stanley. Just because the name of the product has not changed for a few years does not mean the product has not changed. Hello, when did the iPhone launch? About 15 years ago. Is it still called an iPhone today? Yes. Is it the same product? No. Idiots. Maybe Tesla can rename the entire lineup just to help Morgan Stanley understand that they're fresh. Let's go with the Tesla FOAD, because why not? They're just random letters, of course. Holy fuck, dude. I mean, we understand, right? Tesla's continually making small refreshes week after week, month after month, and then periodic major refreshes, like the massive refresh of the Model 3 and the Plaid X. What? All right, I gotta move on, otherwise I'll just be sighing for the whole fucking video. EV demand is decelerating in key markets. We note that while US EV penetration, including fake EVs, is just above 9%, California EV penetration is approximately 25%, with many zip codes in the 40% penetration range. On a like-for-like basis, the state of California has pure battery electric vehicle penetration in line with China. Now, call me crazy, but could California being a leading indicator, could it possibly be that other states will follow slowly, depending on sentiment and trends and following the crowd? Is it possible that, like China is a leading indicator for global EV adoption, that California is a leading indicator for US EV adoption? Is it possible? No, that would never happen. The incremental US buyer must come from other parts of the country. So apparently California's going to top out at 25% electric vehicle penetration. That's it. 25%. That's as high as it can go, apparently. That's one opinion. What the fuck are they doing, bro? Oh, this is amazing. The incremental US buyer must come from other parts of the country, where EV demand, infrastructure, and payback periods are far less in favour. So can confirm Morgan Stanley strongly believe that EV penetration will max out at 25% in California and therefore 25% in the US and therefore 25% anywhere on Earth, I think. Seems to be the conclusion that they're drawing there. China EV market is oversupplied, seeing a barrage of price cuts. We believe price competition will persist in 2024 and will spur OEMs to expand their cost-cutting efforts. For example, BYD recently launched new versions of some of their vehicles, priced roughly 15 to 20% lower than the 2023 versions, and more importantly, also cheaper than its ICE peers. Hybrid renaissance emerging as a real competitor to EVs. Oh God. You have no idea, guys, how much I look forward to revisiting this in about 5 years. Fucking hell. Every time I think about a hybrid, I just imagine the same concept when the world transitioned away from the horse to the automobile. Imagine stapling a car to a horse. That's what a hybrid is. That's one way to picture it. It's just so fucking dumb and unnecessary. Last month in the US market, hybrid sales increased 5 times faster than EVs. Jumping in here from an extremely low base, so can't really read too much into that. Toyota, a company almost completely absent in the battery electric vehicle market, should be the fastest growing major OEM in the US this year, increasing market share. Why? Because they're desperately trying to milk their loyal, daft customers. Oh, buy a hybrid instead. Buy a Toyota hybrid. Toyota hybrid's good. This is going to be like a short-term sugar rush that creates a false perception that people are interested in hybrids, as opposed to brand loyal customers are willing to try a hybrid from a company that over time has gained their loyalty. Fool me once. Hybridization, including extending range in plug-in hybrids, gives internal combustion technology an extended lease on life as a competitive technology, competing for the marginal buyer in all key markets. We expect Tesla's Q1 2024 results to come in below expectations on profitability, with GAAP operating margins in the 2 to 3% range, implying underlying EV manufacturing margins to be potentially in the red. In response to falling profitability, we anticipate Tesla will pull back on price cuts to defend margins and cash flow. Now, by the way, I do have to jump in here. I think it is inevitable at some point, I mean, I've talked about this publicly, despite some of the false narratives to the contrary, that Tesla, if necessary, will continue to scale up their advertising efforts. Because as I've said in the past, again, despite reports to the contrary, advertising works. Many consumers are ill-informed about the perks of electric vehicles. And Tesla's been doing small-scale advertising campaigns the best way possible, beginning online, which is the best way. Why? Because you can measure explicitly what kind of points convert customers. What are people searching for? What topics are most important? The most effective way to learn how to advertise something is to do so first online. It's the most measurable form of advertising. We can reach wide scale, get great data, and implement. So Tesla's been doing this. If necessary, it's very likely eventually they will scale up these efforts once they've really refined and understood what's effective, what's the best strategy. So just planting that flag now. It is likely to happen if necessary. If rates don't start coming back down in a reasonable time frame, don't be surprised. I still personally would prefer Tesla didn't advertise, mostly for the bragging rights. However, this is, by the way, this is the same guy who never asked people to subscribe to his channel because no fucks given. It works, but no fucks given. However, we still forecast Tesla 2024 free cash flow of less than $100 million for the year. This is hilarious. The US hybrid market share. See Toyota and Lexus dominating the massive hybrid market, almost 60% share. This is like Tesla-like share, except there's just one problem. Hybrids are going away because they're ICE vehicles with a vibrator-sized battery in them. Honda, nearly 20%. Ford, 10.5%. Kia, 4.2%. And everybody else, a tiny sliver. Key changes to Morgan Stanley's model for 2024. By the way, if you guys want to see my model, bear case, base case, bull case, and hyper bull case, click the link in the pinned comment to join Patreon at the investor level and above. Morgan Stanley's unit volume cut to under 2 million units, implying just over 10% year-over-year growth. Auto gross margin reduced to 11.4% from 13.2% previously, driven by lower volume and more severe price cuts. GAAP operating margin reduced to 3.7%, troughing at 2.2% in Q1, versus previous forecast of 5.9%. And importantly, and I agree with this, we continue to expect Tesla will devote OPEX and CAPEX to many non-auto projects, despite the top-line headwinds of 2024. If you're a long-term investor, as opposed to a short-term gambler, this should be music to your ears. If there's some top-line headwinds, e.g. revenue a bit flat, deliveries a bit flat, people are, oh, I'm scared, EV demand's slowing down. Yet Tesla is investing aggressively in non-auto projects, e.g. AI and so on, this could be a wonderful opportunity while people are distracted, panicking, crying, whining, banging the table. Elon, do something! My investors are pissed off. My investment is down. Smart long-term investors may see the opportunity. Earnings per share being cut down meaningfully. Gap EPS forecast 99 cents versus 154 previously. And check this out. Free cash flow cut to 86 million versus 1 billion previously. This forecast still assumes Tesla spends just over $10 billion of capex as guided. I'm not going to go through all the numbers individually on screen, but if you're a nerd and you want to pause and have a look, feel free. Between you and I, I'm kind of praying to the flying spaghetti monster, the one true God, the only Sky Daddy. Don't get mad that many of these estimates are on point. That'll be delicious. Again, I'm still buying with every spare cent, so the cheaper the better. And now, I just want to drill down to Morgan Stanley's 2030 estimates for Tesla vehicles sold. All right. Grand total of, not kidding by the way, this is their base case for Tesla. Vehicles sold in 2030. 6,784,097 vehicles delivered. Now, I do not know, I just don't understand how dumb these fucking guys can be. Like, let me explain. They have Model Y selling just over 2 million units for the year. And that might be about right. Combined Model 3 and Y sales are actually roughly in line with my own estimates for 2030. Let's call it 3.6 million units. That's about right. I'm around 4 million potential. Right. Okay, so if the 3 and Y combined could sell 3.6 million units, can someone explain why the fuck Morgan Stanley have a compact vehicle, the next gen vehicle that's going to be meaningfully more affordable? The vehicle that Tesla themselves have indicated is the vehicle to get them to the 20 million units per year. How the fuck is that only selling 1.92 million units? Oh my God. What? How high are these people? Save some for me, whatever you guys are smoking, please. They've got the Model Y selling more units than Tesla's next-gen vehicle. Hello? What? In what universe does a much more affordable vehicle? I just don't even. Hey. The only possible explanation here, and it can't be a possible explanation because it's not realistic, is that if Morgan Stanley thought Tesla would only just be starting to ramp production on their next generation vehicle late this decade, and therefore they had only just reached 1.29 million units of total production. Oh my God. I just don't get it. Actually, they just don't get it. Price target cut to 320 versus 345 previously. The price target comprised of 6 components, $68 per share for the core Tesla automotive business on 6.8 million units. I can't even speak. I can't. Tesla Mobility, $61 a share. A fleet of Tesla robotaxis of 158,000 vehicles in 2030. Tesla supplying batteries, etc. to third parties, $39 a share. The energy business, $38 a share. Tesla insurance, $6 a share. Network services, $108 per share on a total Tesla fleet. 17.7 million monthly active users. I just can't. No change to the bear case, which is $100 a share, or the bull case at $500 per share. Now, I've got to say, I actually like to see a massive difference between the bear case and the bull case. The last thing you want to see is these things too close to each other, because what's even the point? Although, can we just be honest here? If these guys are expecting Tesla to do 6.784 million vehicles in 2030 in their base case, I think realistically that's probably much closer to a bear case scenario. I think it's pretty likely that even in the worst case, Tesla's closer to double this amount than to this amount. But hey, I wouldn't know anything. I'm just some idiot on the internet. Plus, I don't wear a suit, so you can't trust anything I say. Possibly the most shocking thing of all, if we look at the bull case, Morgan Stanley's bull case for Tesla in 2030 has them selling 9 million units, 9 million vehicles in the bull case. Really hard to understand where their heads are at. But if I'm right in that they're dramatically off the mark to the downside, and they're extremely bullish relative to most others on Wall Street, again, $320 price target, Tesla stock today in the high 100s, 170s, could possibly represent a bit of an opportunity. Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. It's an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links at the pinned comment. See you over on Twitter and or Patreon, and don't forget to grab your AG1. Love ya.